Good afternoon and welcome to another episode of Talking Shop. If you're joining us for the first time, welcome. You've come to the right place. True to our name, we are 4 account managers based in the city at IG, and we're here to talk a little bit of shop and explore how a market topic can break down in lots of different ways each episode. If you've ever wondered what it's like to be a fly on the wall of our trading floor, Talking Shop is for you. So, it's been a really quick 3 weeks. We actually did skip an episode last week. That's probably our fault because, there was an election. But we're back. We're back with a new topic. And this week, we're looking at FOMO. You ever had FOMO? The market's roofing at the moment. Crypto's on the surge post-election. Tech is back at all-time highs. And so we're looking at that sense of FOMO. And this week, I'm joined by...
Introduce myself.
If you could.
Sara.
Perfect.
Pete. Sean.
We've got a full quintet. My name's Luke. It's great to have you along. So why don't we just start with what is FOMO? The fear of missing out. Okay. The dictionary defines it as the psychological force that can influence your behavior where you feel like you are missing exciting events that other people are going to. So, have we ever had FOMO before?
Absolutely. And I know that's a dictionary definition, but I think an additional part when you're talking about in financial terms is with little regard for the consequence or the risk or the downside. So, yeah, I think we all had FOMO at some point, certainly in financial markets. Personally, probably crypto related more than anything else, but absolutely, everyone gets it at some point.
Yeah, I think it's difficult as well, specifically in this role as a premium client manager, sales trader, living and breathing the market, seeing it all day, every day, speaking to clients about it. There's a lot of things that you spot that you see. There's opportunities all around you. And so I think FOMO is like a day-to-day thing that, we definitely encounter is, do you want to be on that trade or not? And if you are, what like Sean said, what's the risk if you do go into it? Obviously, you can't trade every single thing. And obviously, we've got lots of constraints about what we can do. But sometimes you can be in something and then you want to exit it. And then you have FOMO that if you exit it, you're then going to miss out on the next bit of the journey. Take crypto, for example, now after last week's election, we've seen all-time highs over the weekend, continuation of that in Bitcoin. We've seen people wanting to trade the iShares Bitcoin ETF, the iShares Ether Bitcoin ETF, Ether ETF rather. We've seen all this traffic towards wanting to get access to, MicroStrategy, Coinbase, all these sorts of things. And if you're already in that trade, when do you get off? Because you go, right, is this the rocket that now everyone wants to get on? And, are you getting off early? If you get off early, yeah, you've got a bird in the hand, but then what's that worth? What's the opportunity? I mean, it's
I can tell you when
crazy,
to get
right?
off the crypto bandwagon.
When do you get off?
You get off the train when my Mama Stacey, if you're listening, when she calls you up and says, darling, have you heard about this thing called crypto? I read about it on the Daily Mail.
That's the exit, right?
Sell your stock, sell everything you own. My mum called the old 20,000 market high like an absolute on the nay money.
Yeah. That happened around Christmas, didn't it? It was around Christmas because my nan also called the exact top as well.
That's it. It's when we created the term unlongable.
They should have their own trackers on our website. We should set up their own ETF.
Yeah.
Mama Stacey and Nana Moore.
There should be. But crypto isn't the only one. So I just tried to rack my brains. We've all been in the markets for a little while. And it's not necessarily just about the moves now, but it's about those exponential moves, which is what I think we're trying to figure out. How do you catch a bid and try to stay on the ride? So nickel, March 2022, was a huge one. I mean, that ended up having some pretty savage consequences because all of those trades got walked back.
Mm-hmm.
But, this year we saw the commodities cocoa and orange juice. Both of those were in these huge exponential runs higher that people were constantly talking about. And it was always a worry. Are you seeing the trend too late? And, how do you get off?
With lumber.
Lumber.
Yeah.
This is a really key point, and it comes back to what you were saying, Wardy. There are so many markets, and I think that's the biggest problem with FOMO is you can't be involved in everything. You can't be an expert in everything. And that's when people tend to just go in blindly into these trades because they want to be part of the trend. And like you said, Sean, you don't think about the consequences of it. And I think that would be really interesting for us to explore today is you can still be part of the FOMO trade. You can still trade something when it's at all-time highs. It doesn't mean you've missed an opportunity. But to sit there and say you would have been in cocoa, lumber, nickel, oh, I would have bought oil when it went negative. Yeah, but you didn't. And I think that if you stick to your key trading strategy and the markets that you know about, you won't have FOMO because you'll already be in that trade before the trend takes off.
Yeah.
And that's, for me, the biggest problem. You just wouldn't have been in all these markets.
No, that's true. You're not going to be in all of those, which is a fair point. And I think that what I've learned more recently is that, like you said, just because something's got to an all-time high doesn't mean that that's a reason for you to go short, or it's a reason for you not to get in because it can go higher, right? It's high for a reason. There's momentum behind it. It can keep building.
There's the famous saying, right? A chart doesn't have a ceiling. Zoom out and you'll find out that the chart can go exponentially higher.
Yeah, exactly right. And interestingly, in the last sort of week or two, we've had earnings from some pretty big firms, Palantir being one of them. And that's, gone from like $17 to say 40-ish. And then on results, since results last week, it's moved another 45%. Coinbase last week had numbers weren't great. It came back down through $200, getting down to like 190. Election comes out. It's moved 77% in 6 days. It's trading at like 360. So people that go, right, okay, well, I can't possibly trade this because it's too high. It's too high. Well, what's too high? Bitcoin used to be what? 200, 300, 1,200, 5,000, 20,000, 60,000. Now look at it. It's like the FOMO thing is all the time. It's that decision making that you need, I guess, as a trader. Is if I sit for too long doing nothing, I'm going to miss everything. Yeah. So what do I jump on, and what do I leave?
I suppose it's probably the right way for us to kind of start to structure this conversation then is how can we, if you were going to break down what FOMO means, we've all just discussed what it feels like. How can you identify it? How do you know that for the traders and the clients that are hopefully going to listen to this, what can they notice in their own behavior that might go, actually, this may or may not be the best of ideas. This is FOMO. What would you say?
I would say it's the shoulda, woulda, coulda trade. It's FOMO. Oh, look at crypto now. You've seen a headline in the news and you said, I could have bought that. I should have bought that. I would have bought that in whatever, April, August, whatever. And you didn't. And for me, that's FOMO. You're only doing it. It's now in the news, but actually, was it on your radar back at that time? And if the answer to that is no, you've just got FOMO. You're seeing something. You're seeing a lot of people make money and you feel like you're missing out, literally.
Yeah. I think there's a lack of planning. That goes out the window of FOMO trading. Risk management. Are you using the same criteria you used for previous trades? We live in a modern world where social media can hook people without so easily. It's looking for that emotional response. And that is FOMO.
Yeah. I mean, you cast your mind back to the meme stock craze.
Oh, yeah.
Now we've obviously had the resurgence of Roaring Kitty this year, but back in when it was 2021, I think we had GameStop, AMC doing the rounds. FOMO then was huge because it was, if you weren't trading, why aren't you trading? Was like the conversation that people were having amongst their friendship groups, people that maybe had never traded before. All of a sudden they've got one person who's just, absolutely crushed it on this. And then you go, right, that's fear of missing out. Go, well, if he's doing it, I must be able to do it. Yeah. And that goes to your point, Sean, of going, you're not essentially ready to enter the trade because you've not done your research. You're jumping on a bandwagon because of the fear of missing out. And that is dangerous.
Yeah.
So I think social media is weighing up that, potential getting on the train versus do I actually know what train I'm getting on?
I think it's that urge rather than a plan. There's an immediate urge and you immediately link it back to previous ones that you may have missed. So I think those kind of factors all combined to go, well, I missed it last time, I should do this now.
But it's that fear of being wrong or losing money through opportunity cost is way more painful than the money you could potentially make from being on it. There's so many psychological studies done in risk management where you say small losses hurt less than you gain from profits. So let's say you lose 100 quid or you make 100 quid on a trade. The loss of 100 quid, even though it's the same amount of money, is going to feel, I can't remember exactly what the statistic like, but it's at least 2 or 3 times worse than the money you're going to make. So there's that loss avoidance, but it's not just loss in terms of cash, but it's opportunity cost. I'm going to go and I'm going to see my friends at dinner. I'm going to go out to the pub. I'm going to see these guys and they're all going to say, God, did you trade NVIDIA today? What did you do on those Tesla options? There will always be a story. There will always be something. And I think I agree with you. I think it's that lack of planning. If you're going to sit and try to become a trader, it's about being consistent. And by being consistent, you want to make little bits of money regularly and hope that you're going to outperform the underlying market.
You also need to stick to your plan, stick to your strategy,
Completely.
right? And the FOMO doesn't do that, like Sean said. There's no planning, there's no thought. As Woody said, it's just you're jumping on a train, but which train are you on? And that's when people tend to actually lose. You talk about the meme stock. A lot of people lost a lot of money because they were too late to the party and they didn't know what they were jumping on. So I still don't think there's anything.
Stocks.
Cannabis stocks a couple of years ago.
People just go, I need to be on this, my friend's doing this. And then, you might normally do your trading on a certain set of stocks. So you might normally do the banks, or you might do FX, or you might do indices. And you might always have, 25K, 50K, 100K notional trade that you're happy with. If it moves 5%, 10%, I know what I could potentially make, I know what I could potentially lose. But then you might look at this potential trade setup and do the old YOLO 20 times the size normal, go onto it blind because you've got so much fear of missing this huge move, and then it just goes wrong. So it's that sort of pre-trade setup work that needs to be done, I guess, before you just jump on these things.
And imagine we've all traded altcoins, right? Back in when it was 20,000, that run up from 5 to 20,000 in Bitcoin. I think I just scattergunned loads of them. I had no idea what they were.
Got your login still.
Don't need it
I remember
anymore.
it well. Yeah, I remember it well. You look at like a crypto basket of stuff.
Yeah.
Some of the coins you could barely pronounce. You go, oh, that's just moved like 300%.
Do you remember
what's going on?
Well, I remember back in the really early days, we couldn't figure out quickly enough how to get, pounds into dollars, into Coinbase, into converting it. And there was a guy that had a bunch of crypto. Do you remember Watsy? Had a bunch of Bitcoin. And so we were paying him cash on the desk to borrow some of his Bitcoin to go and buy all this stuff through various different exchanges. I remember Tom had, I think he had loads of Tron tokens on Chris's account for a while. That he was just like, I've got no idea what it is. And he ended up, I don't know if he came out, made any money or not, but it was just that fear of, it's that not knowing what it is and getting whipped up into it. I do think the media has a massive part to play in this because our attention spans are getting shorter and shorter and shorter. If we were to clip this podcast up, you're probably going to get a couple of sound bites that might make you say, right, I now need to go and look at NVIDIA or crypto or this. But actually what you're losing is the nuance of our conversation. There was a study that was done 2 or 3 months ago when the Middle Eastern conflict was kicking off. And it was a Citibank study on news. So they were talking about the number of headlines over a week period that were negative versus positive. Tensions are getting worse, everything's getting worse, the oil price is going to go to infinity, all this stuff, versus actually, the nuance of troops moving around at these particular geographies. Actually, there isn't as many that are being reported. Therefore, maybe the tensions aren't getting quite as bad. Now, obviously, that's continued on and the conflict is not particularly pleasant for anybody. But what it was saying was there was about a 9-to-1 ratio of negative stories versus positive. Now, at the time, there was a week or so where actually the oil price didn't move too much. If you're a volatility seller, you would have massively made some money on that because you would have sold it. But that's 9-to-1 trying to get you to do something because of a fear of a story to try and get you to go and act. It's really difficult.
But it's also a modern phenomenon, if you think about it. It's people wanting to get rich quick. And that's the problem. It's we live in this world of here and now, of Amazon Prime. I want things delivered next day. Everybody wants now. And the problem with that in trading is it doesn't really work. You actually have to put in your research and, look at your charts or look at your fundamentals to really work out where there's value and where there isn't. And get rich quick and just jump blindly into it. I'm not saying it can't work, but it's pretty rare.
Yeah. No, I would always tell my clients that you're never going to hit it a home run on one trade. And if you do, psychologically, that's actually probably negative for you in the long run because it gives you that false feeling.
Get a YOLO every time, right?
Exactly, yeah. So, you've got to keep it more structured.
What we're saying is then, on the subject of structured, how do you notice that what you're about to do could potentially be driven by FOMO? It detracts from your plan. It's not something that you would have previously done necessarily in your risk profile. It's driven by
an urge.
Maybe a news theme.
Yeah.
That's out of your circle of confidence, perhaps.
I would say there's a sort of an extreme level. You'd have a different reaction to it, as in when you're looking to place it, there's almost an excitement. Maybe your body changes. I think there is that you lose all sense of control, whether that's your heartbeat's beat quicker or you think about the money you're going to make in a week. You kind of get, well, it is, yes. Well,
it is really, isn't it? It's something different, a bit more exotic. You go, I don't normally trade this stuff. I don't normally do this size, or I don't really know too much about this, but it feels like I'm on a crest of a wave and I'm going to hit it.
Yeah, and you only need one story. I remember where I worked before, someone in like marketing department, he's in Bitcoin really early, just retired. He was like sort of mid-20s. And this is when he's at sort of 20.
They're the stories that fuel these things work.
But what you don't realise is 10 years later, he's now knocking on a job after you then went into some other coin that didn't work.
Look, I think these are all really, really interesting points to continue our discussion. So what we're going to talk about next is something we can look at right now. NVIDIA, right? We've spoken about it a couple of times already. Their results are out next Friday. We're recording this on Wednesday. It's the 20th of November is when they're going to come out, usually after the markets.
Next Wednesday, not next Friday.
Next Wednesday?
Next Wednesday, I think.
Wednesday.
A week
Next
today.
Wednesday,
Yeah.
right. It's a week today.
You're thinking about the options expiry. That is next Friday.
I am thinking about the options expiry. You're right. So next Wednesday, NVIDIA are coming out. It's been the market's kind of barometer for risk this year. It's contributed 25% to the S&P's absolute returns this year. It's absolutely ridiculous.
That's crazy.
It's huge. So where does NVIDIA put us? Actually, speaking of ridiculous moves, I was looking into this. So NVIDIA has given 25% of the rally to the S&P this year, right? Novo Nordisk, the Danish stock, has driven 99% of the gains in the Danish stock index, which is just obscene. And second, Taiwan Semiconductor. So they've given the TWSE index based in Taiwan 76% of its year-to-date gains.
Yeah, but you have to remember TSMC literally provide like all of the world's chips, and everybody in the AI world runs on these chips.
Well, they're all three of those names. Novo's been on the kind of obesity mega theme.
Yeah.
Taiwan Semiconductor, NVIDIA, you're right, it's talking about AI. So do we want to quickly dive into where NVIDIA fits in ahead of their results tomorrow, next week?
Yeah, I mean, I think for just anyone listening out there, you might have heard the name NVIDIA. It's banded around. It's definitely a FOMO stock. It's a huge part of the AI theme. In terms of, I'll give you a bit of background if you want on what they actually do. They design GPUs, graphic processing units. What's a GPU? Really simply, back in the day, if you like, your computer had a computer processing unit. And what a computer processing unit does is it does one task after the other, but it does it really, really quickly. What a GPU, a graphic processing unit, can do is thousands of tasks at the same time. So it's millions of times quicker. What it would take a CPU to do over days, it will take a GPU hours less. And if you think about it in the world of AI, in order to train an AI model, you've got to do millions, billions of calculations all at once. And so it speeds it up. And NVIDIA were the guys that designed these GPUs. They started off in video games, because if you think about it, to get the picture on your screen, you need your color and your lighting, and all of these things come together as your pixels, and it needs to be updated in real time. They all of a sudden then clocked and went, hang on a minute, let's put this into the AI world. And so, other things now like autonomous driving or real-time language translation, you need to process data super quickly. Like that's the only way that you can make decisions in real time. And these guys are at the forefront. But I think one of the real key things when we look at...
Do you want to just... You told me yesterday you were going to use a certain... you were going to compare CPUs and GPUs. And I think we should definitely put it in.
Okay, so if for anyone that still doesn't understand the difference between a CPU and a GPU is, I think of CPUs as my male counterparts, you wonderful people, and that you can do one thing at a time, nice and quickly, one thing after the other. And your GPU is, like a wonderful woman, can multitask, can do many tasks at once and provide.
There's no argument here.
And listen, our output can be the same quality. It just takes you guys a little longer.
A little bit longer.
But yeah, look, super important. I think the one thing that is cool about NVIDIA, because, you might say, well, hang on a minute, surely they're not the only people that design chips. And they're not. You've got Intel, you've got AMD. There's other players coming into the space. One thing that NVIDIA does that everybody else doesn't do is they also have the network and they also have the software. So they don't just have these chips, these pieces of hardware that goes in your computer, your data center, or wherever. They have the full sweep of all three. And that makes them very, very difficult to compete with on the scale. Even if you come up with a better chip, a faster chip, it's very hard to compete with them.
So we can
They've got
see
huge margins to scale, right?
they've got huge margins, and their total addressable market is basically the entire market for this new technology. Who's potentially going to come in and be the one to spoil their party? I think this is when we start to talk about FOMO. You need to try and figure out where is the off ramp, where is the on ramp, and where are the different players in that space, right? So, various different reports say that their order book is absolutely packed out. But their new chips, their black hole chips, are going to be the next generation chips, and they're going to be the ones to come and save. The valuation for where it is now has to be reliant upon the Blackwell chips. And the Broadcom are probably the only ones that can come in and do something in that space. So they've got, an absolutely clear runway, it would seem, which is why the market is paying them. What part of that story creates FOMO?
So I think it's kind of is it too late to get on that train? That's the part that creates the FOMO. And it's also the valuation of the AI sector as a whole. It's the whole, how do you put a price or a target on something where you don't know the ultimate power of what it can do? And also how much demand there's going to be globally, because we're just scratching the surface at the moment. So a lot of clients I speak to, they say, oh, it's a bit like when back in the dot-com bubble days, where anything that had, .com associated was just going higher and higher and higher. But no one could actually put a tangible price target on what it could do. Now, obviously, the internet is now out there, and the ability of it is kind of known. Whereas with AI, it's still like trying to value something that's very difficult to value. So
I think this is where the valuation, right? This is really interesting. And this is how you know people have FOMO now. When was it? Earlier this year, June to August this year, NVIDIA's share price, let's not forget, went from $140 all the way down to $90. Now, you could have bought it then. A lot of people go, that's a nice pullback. But no, a lot of people went, well, hang on a minute. If it's coming off, I don't want to buy it.
That's it.
Maybe the bubble And now those people are sitting there with the FOMO. Oh, well, I could have bought it. I should have bought it. But you didn't. And that's the thing. If you understand the true fundamentals of a stock, you need to be able to look at it and say, this is what I think the value of the size of the industry is. This is where I think they are currently within that. This is the proportion I think that they have as a propensity to grow. This is how much money they make, how much debt they've got. Even now at $140 or whatever they are a share, you should still be able to make an educated decision of whether or not you think there is more value in it.
You can do all your analysis that you'd normally do on your normal investments with a FOMO trade, and you can go, okay, I want to be in NVIDIA, but what I'm going to do is I'm going to apply my usual tactics. I'm going to look at earnings. I'm going to look at PE ratios. I'm going to look at this, that, and the other. I'm going to wait for a main macro sell-off, not in NVIDIA, but in something else where everything gets smacked, and then I'm going to go shopping and I'm going to pick it up. And that's the way to try and maybe attack these FOMO trades, is go, I am going to get on that train, but I'm not paying that price.
Well, that's the thing. You need to have a very clear entry and exit strategy. And that's how you avoid just blindly jumping on a bandwagon. But I guarantee you, the amount of people that are sitting there without NVIDIA at the moment did not want to buy it when it was at $90 in August, and they panicked. And like you said, people have a fear of losing more.
And the fear of losing,
the fear of missing out, actually, because otherwise,
like I remember when someone did a study on UK invested accounts, like ISAs, share dealing accounts, something like that. It was like the average person has maybe 4 stocks, and I think the most popular stock that everyone had was Tesla. So for some reason, people wanted Tesla, and I wonder whether NVIDIA will be the new kid on the block with regards to that. Right. People just go, I need a bit of that.
I think the FOMO has all the same characteristics, right? The big, huge numbers, the big moves. That's what sucks people in. And people get involved without fully understanding what they're trading. To your point about when it pulled back to 90, that's why they don't still buy it.
Who here around this table bought NVIDIA when it was $90 this year?
Nope.
None of us
Who would buy it ahead of numbers next week?
Well, if you wanted to buy ahead of next week, you could do a little trade setup using some of the bits and pieces that we've got either on the IG platform or on the Tasty platform. If you wanted to go long and you had a bullish view, you could always try and adopt a little strategy. I was looking at it earlier on the options. So the stock's trading at like 145-ish. You could go long the stock. We offer it with a guaranteed stop $20 away, so 2,000 points lower, which is not inconceivable. The implied move is about 8%, 8.5%.
Mm.
So that's about $12, $14. So you can, in theory, go long the stock, put your stop in, lower down, guaranteed, so mitigating your risk. And then you could work out, basis the implied move, whether you think it will go beyond a certain point. And the 170 calls, you could sell those for about 100. So let's just say you're working £1 a point. You could go long NVIDIA, risking $2,000 with a 2,000 point stop. You could sell the hundreds in maybe, I don't know, £1 or £2 and try and collect that premium so that the stock goes up, but it doesn't go beyond 170. And if it does go beyond 170,
You've got the stock.
you're covered by the stock paying out the option. So you can attack it that way. You can do that on our platform. We've got the weekly NVIDIA options on there now for everybody to see, along with the Novembers and Decembers. But the weeklies that we've got on there now run to Friday of next week, which includes earnings. And that's why the implied volatility in those is like 80. And I was at the Tasty live presentation last night in Manchester, and Tom Sosnoff was doing live trading, and he basically said anything with implied volatility above 30 is very high. So to be up near 70, 80 is high. So if you're an option seller in that scenario, you're getting a much higher premium, which is attractive.
Do you know the other thing? So I was at the event on Monday in Edinburgh, and the thing that struck me, and we've all spoken about options and traded it for clients and had these conversations before, but the thing that really struck it for me was, if you look, and this will help when having this battle against FOMO, options will have a delta, and that's roughly the sensitivity of a change, $1 movement in the underlying. How does the option move? But what it also is it's also the rough probability that option is going to settle in the money. And Tom Sosnoff, his whole premise is, as a contrarian and as a market maker, he's happy to give those odds away. He's going to sell those premiums. And he was saying, I'm always going to start, I want a high probability trade. I want to look at 25 delta options, i.e. a 25% chance these are in the money, 75% chance they're out of the money. So if you're looking at a FOMO trade, you're looking at NVIDIA, you're looking at lumber a couple of years back, you're looking at the weed stocks, you're looking at whatever the current theme might be, there's always the ability to go and look at option structures now on our Tasty platform and say, what if I'm not looking at the underlying, I don't want to buy a stock, and I don't want to be exposed to the actual move. How far do I need to get away from the current price for the delta to be 75%? I want to be 75% likely that this is going to pay me because I'm selling it to somebody else. But thinking about things on a probability basis, as opposed to getting sucked into the media and the news, is quite a refreshing approach, actually.
It's a really refreshing approach. And it takes the directional bias away from it a lot of the time. You don't also need to pick necessarily
the direction
of it. You can purely trade on whether you think it's going to stay within a certain range or move outside that range. It's why a lot of people trade them.
Yeah, with a known risk as well, which is nice.
I think something like NVIDIA, because it is a FOMO stock, I would always take a lot more time to enter the trade, have a risk strategy in place. I think quick ideas are never really profitable. And for some sort of balance, I personally wouldn't trade it ahead of the numbers just because of the FOMO. Yes.
You also know that it is so the expectations
absolutely
as the market darling is so high that even if they beat their numbers, if they don't beat them by enough,
they got to steamroll them.
The market will be disappointed.
The consensus on the revenue is that they come in with 33 billion.
It's huge.
Which is up 82% year on year.
But 80% of that comes from the data center platforms. So gaming, and I think it's like there's a couple other little segments. They're next to nothing. So it's all going to be in that data center. And I think it will continue to grow, but over the next 2 or 3 years, it will slow. So if anything, I would wait. Again, I don't know if this is just my opinion, but I would wait for the results, wait for that pop, wait for a pullback. I'd even potentially sell calls after it against your holding, look for a pullback. Good company, another 3 or 4 years in it. Just take your time. Don't rush into stuff.
As it pops to 180.
Oh, missed out. Yeah.
Bought it at 145.
Want to go away again.
Yeah.
But we've seen clients that have just been holding on to shorts in it. Just cannot take the pain of realizing the loss on a short position.
That's another big pitfall of FOMO, is that people get FOMO and then think, well, it can't go any higher. As we said, it can. There's no ceiling. I hear it all the time. It can't go any higher. Why can't it? Tell me where the law is or the rule is. It very much can. Just because you think it shouldn't go any higher, that's very different. And people always try and short what is considered the current all-time high. But if you look at how many all-time highs we've had this year in the US indices, I've lost count.
Go on, and pop quiz. I know the number.
Oh,
So
go on.
it's 13th of November. How many all-time highs have we had this year in the S&P?
Think I saw maybe 1, 2, 3.
I was going to go like 6.
6?
I know.
You've been under a rock all year.
Living in a cave.
I would say like 34.
113.
Oh, really close. Winner.
Really?
So imagine every time you saw the news all-time high and you went, oh, it can't go any higher, I'm going to short it. You'd be just crippled in pain at your computer
Which
right
is why
now.
you can have a short position, right? Being short at the moment is attractive because of interest rates, right? So you can get paid, receive LIBOR, earn some interest for being short. But you don't have to just be short holding the baby. You can do other things as well. Like you can, do some option strategies with it. You could sell puts against your short position covered again. So if the market does drop down, you've got your short position, but you could earn some premium in the interim bit. And I know Rich talks about it a lot on the IG live show, but it's basically generating yourself additional yield, like holding a stock and being paid a dividend. If you are orchestrating a covered scenario, you are mitigating your risk, but potentially trying to earn some additional premiums. And it's a really interesting way to trade. Definitely worth exploring.
Completely. Should we have a quick chat about crypto? It's another mega theme that we're seeing at the moment. Crypto's back through all-time highs again. It's been a real big beneficiary post-Trump. The biggest, I saw it yesterday, the biggest FOMO indicator I've ever seen is MicroStrategy, right? MicroStrategy was a data center business in its infancy, and it was one of the names that did really, really well in the dot-com boom. There were some accounting issues, and it got absolutely smoked. But what they do now is they take Michael Saylor, is that his name? Michael Saylor's money, and it's basically become a Bitcoin holding company. So a load of investors will allocate towards MicroStrategy as a way to get exposure to Bitcoin. Problem is, it trades. If you take the Bitcoin that MicroStrategy holds and the value that the market is assigning to those Bitcoin, it trades at like a 40% premium to its net asset value. So it's a ludicrous trade anyway. But the point I'm trying to make is its previous all-time high was in 2000.
Yeah.
It made a new all-time high yesterday.
Imagine 24 years later and what you could have done. That's the opportunity cost of with that money.
Places to buy and hold camp.
On a long-term portfolio.
That's it. In the answer graveyard.
That's another FOMO thing, right, as well. Not knowing where your other opportunity costs lie. And you've got two problems with the FOMO trade. Once you're in it, when do you get out of it? Or when do you cut your losses? And you can get FOMO not just by trying to enter the trade, you also get FOMO when you exit the trade. And I will hold my hand up and say that I exited all my crypto maybe 18 months ago.
Yeah, we already know
Absolutely.
your PA trading account's not worth following, though.
One little remedy for that, actually, now you mention it, is something that Axel frequently preaches with his technical analysis stuff, is if you get the trade right, and let's say, to go back to our analogy, you're on the train, it's going up the chart nicely, but you want to get off, just leave a tiny bit.
Well, he always says make a bit
of
profit, so it makes you feel like you won.
That's to do with your stop loss. That's to do with your stop loss. So that's put your stop loss just above break even, so that even if you get stopped out, you still earn something. But what he was saying is, if you've got, 10 units, leave 2 units, and then those trades can, at the end of the year, turn out to be your best performance because they've just run, and you just let them. But it gives you that little bit of antidote for FOMO because you're still in and you're still cheering it on.
I like it.
Yeah, it's a good way to think about it. What I think is going to be worth spending a couple of minutes on is can we think about, other than crypto and NVIDIA and that kind of AI themes, what other sectors right now are moving in like a higher potential for FOMO kind of
Tesla, everyone's talking about at the moment.
Yep.
What the Doge president. We were talking about it on the show this morning. It's been confirmed that Elon, and obviously Tesla's going to be the vote for Elon, he's joined the Department of Governmental Efficiency, DOGE, Doge, and he's got this Doge badge and it's going to be all over the White House documents. So Tesla's a huge one.
Are you a musketeer?
Is that another one? Musketeer?
That's called Elon Musk.
I've never heard of
Musketeer. I feel like you're either part of
Luke's
the
a
hype.
fanboy.
I think I think you've got to be a fanboy. Look at what he's achieved and the value that he's created through SpaceX, Tesla, and it was PayPal before, wasn't it? I mean, you can't deny that he's done an incredibly good job, whether you believe what he talks about and
Now
the way he delivers it.
Rockets up and catching them, you kind of got to go, yeah, this guy's.
Hell yeah, it's the closest thing we've got.
It's
thing we got to Tony Stark.
Yeah,
The whole stock relies on him. If he was to die in a plane crash tomorrow, that stock becomes worthless, right?
Yeah, no, it's an investment in him.
Concentrated.
All of his stuff is.
And that's why I say you're a musketeer. You either believe in the power of him or you don't. I mean, the guy's a Fruit Loop. He went on and said that he was going to take his company private at 420 because he likes to smoke a lot of weed. And 420 is National Weed Day. Just made the price up out of thin air.
Hasn't his kid got like a numbers in his name?
Oh, yeah.
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 Apparently he doesn't sleep. Just like sleeps on the floor of the factory or something bonkers. Like the guy's unhinged. But if you believe in it, then you won't have FOMO like I do now. Who doesn't have any?
There's an element of FOMO in all markets post-election, right? Everything's just pretty much gone through the roof. It's all like, it is just crazy. So I think across most markets, there's an element of FOMO at the moment, but that leads in itself to possible bubbles. Then where does that stop?
What's the difference between FOMO and a bubble? Is a bubble just what people who don't have the stock say?
I think FOMO precedes a bubble, right?
Yeah, that's a good way of putting it.
You're
probably right.
Just everyone likes to go, that is a bubble.
Everyone
don't have it.
Once everyone's on the same path.
Irrationally on the same path.
Yeah, you're blindly on the same path.
Yeah.
You're right.
The
It's the people that aren't in it sit on the sidelines and shout bubble as they try.
Markets can stay rational and you can stay solvent.
It's interesting, actually. You said something earlier, Luke, to me off desk, which was about the whole FOMO element. You basically found an ETF.
Oh yeah,
this is pretty cool.
I nearly didn't mention it. There's an ETF with the ticker BUZZ, BUZZ, and the name of it I can't remember off the top of my head. Did you write it down?
Yeah, so BUZZ, it includes MicroStrategy, Tesla, Palantir, GameStop, Visa, Amazon, Intel, NVIDIA, Coinbase, and Costco. So basically, everything that's being talked about, it's all packaged together in one nice little.
Oh yeah, here we go.
But what the ETF?
They should rename it FOMO.
It should do, yeah.
What that ETF does quite nicely is supposedly chuck out things that aren't on the kind of media hype train. So they will constantly replace their assets with. They'll have some algorithm that decides that this is a hot stock, this is a hot sector.
Is it looking at the odd social media like heat flags?
Yeah. So it's just interesting. I mean, look, it's not advice at all. It's just we found it on our research. It's quite an interesting way to approach it because I would always say a way to try not to get absolutely hosed is don't get too concentrated. If you've got a portfolio and you're doing the right thing, yet you FOMO into a name, the edge that you're going to have in that name is limited. So is a way around it diversification.
Yeah.
Is that?
I agree with diversifying
or if you want the world
risk.
to burn and you hate all this sort of stuff, you could just sell that ETF. And wait for everything to pop.
I agree with diversifying risk, but I don't know if the way to diversify it is to go into an ETF that is just all of them.
Everyone likes to back
they're all going to pop at the same time. They're all going to
packaged together.
Yeah, well,
bubble.
That is bubble FOMO. Yeah, it needs a new ticker. BUZZ. Right, look, I think we've been chatting away for long enough. Let's move it to our favourite section of the week, the margin call. Lovely. Right, margin call of the week. For those that have just joined us, this is the way that we like to finish these discussions. You know, who's on margin call? Who has made a bad decision? They're offside. They need to do something about it. They need to take the position off, and they're just going to get margin called. Who's taken the biggest L over the last 3 weeks, I suppose, isn't it? I've already said to the group, we can't pick Kamala Harris. She's going through enough at the moment. She did take a massive L though, and Trump's clearly the victor there. But who else has got a contender for this week's margin call?
Yeah. Okay. Apart from my PA account, obviously.
That was last week's.
Every week. I think I'm in the studio with you guys instead of my yacht in Saint-Tropez. Yeah. Okay, so my margin call of the week is a weird one. I was doing some research for this podcast and was looking up FOMO, which is a word now in the Oxford English Dictionary, and am mortified to find a number of words that are now part of the Oxford English Dictionary.
Wait, so you're saying FOMO is officially in the dictionary?
FOMO is an official word. And I understand that language is evolving and we don't talk like we did back in Shakespearean times, but I'm also horrified at some of the words I've learnt. So also included in the death of our language in the dictionary now is YOLO,
YOLO.
besties,
Mm-hmm.
bae. So bae is like your significant other. It's like the modern. It's like the modern.
You're
like,
all right with YOLO though.
Yeah, the middle-aged man in me is trying to just scream at this.
You're not
point.
calling Mrs. Powers bae.
No,
I think we need to clip that up. That should just be the boomer noise.
Just a,
The most offensive word that I found that apparently is now part of the Oxford English Dictionary is worstest. Can you imagine if I was on the phone to a client and I said, yeah, no, that idea is the worstest.
Maybe you should if it was a FOMO idea.
So my loser of the week is the death of the English language as we know it.
God,
I like it.
How do you follow
Sticking
that?
on that theme of, I guess, English or UK or whatever it is, I guess my biggest loser or biggest L or biggest margin call of the week has to be our sleepy old domestic index, the FTSE 100. Solely because we've got all the American indices ripping to all-time highs. We've got every single trade pointing all-time highs, screaming. We've got Luke saying we've had 113 all-time highs in the S&P. We've got cable at recent lows at 127.40. You've got 70% of the companies in the FTSE who earn in dollars and therefore should be happy with cable where it is. And the market should be screaming 83, 84, 85, 86, maybe even up towards 9,000. And we've come off 200 points and we're now teetering at 8,000. It just does not want to move. It didn't want to move during COVID. It didn't want to move when there was QE. And it's a continual pain. I love to support it, but it's picking up the margin call for the week for me.
Can I just confirm that this is called talking shop, not talking your own book?
She needs a bit of FOMO. That's what it needs.
That's it.
We need a bit of
We need an
FOMO.
AI stock in there.
Yeah, definitely.
I'll throw a hat into the ring. I think everybody knows about Nancy Pelosi, right? So Nancy Pelosi is famed for being a bloody good trader.
Is that what we
Wink.
call them? Bloody good traders.
Bloody good.
Bloody good traders. So the wink, wink, nudge, nudge. There is there's a website out there called Autopilot that now tracks supposedly massive investors and really famous investors. So Nancy Pelosi is tracked and has a performance. People like Michael Burry get tracked and has a performance. This isn't an IG company, and so I actually maybe shouldn't have said the name of the company, but Jim Cramer of either MNBC or CNBC, the Mad Money show.
Yeah.
He has got a bit of a meme following for being a pretty bad caller of the markets. So there is now an inverse Cramer tracker. So everything that he says, this tracker does the opposite. It's pretty wild. But anyway, as of this week, inverse Cramer has overtaken Nancy Pelosi as in terms of performance year to date. So literally the opposite things of what Cramer says is now better than Nancy Pelosi.
Nice. My last one is for myself. After that, in my defense, I thought you said, I wasn't really sure. I thought you said something like the election on last month. And I thought Pete said 3 or 4. And I was like, oh, it's got to be more than that. So I just went 6. Then it's only when Pete just said that then, this year, I was like, oh, no wonder you laughed at me. So I think I deserve it for that. So yeah, myself.
Who's it going to, Luke?
I'm going to give it to, I'm going to say the English language. That's outrageous. That is completely
the
outrageous.
worstest.
It's the worstest.
Yeah.
It's the worstest, bae.
Guys, that's going to be it for this episode. Thank you so much for being with us. And thank you so much for listening to us chat a little bit of shop. We shall see you next fortnight.
Thanks.
Bye. Bye.